Hello and welcome. You're watching Business Today Television. This is Market Today and I'm Sakshi Batra. Well, the Indian equity markets, they reversed a bit of the Tuesday's gains with the Nifty ending at a 5-month low yesterday. In fact, the tone was pretty negative right from the beginning. Although there was buying in select heavyweights from IT and from the banking sectors, that helped limit the decline as the day progressed. But we did see how the Adani Group stock slid, and this was as an aftermath to the US court indictment of Gautam Adani and other group members as well on the charges of bribery related to certain solar projects, and therefore we did see an all across the board a sharp sell-off. In fact, at their lowest point, the Adani Group's cumulative market cap had declined by 2.6 lakh crore rupees, and that was largely what was tracked in all of the day yesterday, as well as the stocks declined anywhere between 7 to 23%. A day after that, again, investors will be keeping a keen eye out on as to how the stocks will move for the second day in a row. We will also be looking at how India's manufacturing, composite and services PMI has come in for will come in for November, alongside movements in Adani Group stocks, and of course the NTPC Green IPO that enters its third day of subscription as well. As far as the Qs are concerned, we did see that the overnight Wall Street, the Dow Jones climbed about over 1%. The S&P 500 rose by half odd percent. It was the Nasdaq Composite that also inched marginally higher in trade. Asia Pacific markets also rallied in the early morning part of Friday, taking cues from Wall Street, where the S&P 500 logged gains for the fourth consecutive day. And investors in the region also were assessing Japan's October Consumer Price Index data too. The CPI has come in at 2.3%, down from 2.5% in the prior month. So Nikkei advanced by about 0.5% in trade. The broader topics gained by about half odd percent. ASX 200 opened 0.7% higher, and the Kospi also moved up by 0.7%. The Gift Nifty is right now indicating of a flattish start at 23,456 on the Indian markets as well. Now, as far as the flows are concerned, again, very important to track that. Remember, for the 37th straight session, the FPIs have remained net sellers. The domestic investors, however, have been still on a buying spree. 5,320 odd crore rupees is something what the FII sold as of yesterday. Of course, a large part of this is skewed towards the Adani impact as well, whereas 4,200 crores was poured in by the domestic institutional investors right there. Again, today will be important. We have our first guest with us. So let's start off our discussion on the markets. Mr. Mayuresh Joshi, Head of Equity Research at William O'Neill India, is now with us. Warm welcome to you and good morning to you, Mayuresh. And thank you so much for taking the time out for this discussion. To help us assess how are you really looking at the markets, there were several moving parts in the markets already. Trump aid on one side, long live China on one side, sell India because it's expensive on the other side, and now it's the Adani Group impact that's coming in. How are you really navigating through all these moving parts? Is it best to stay away from the markets right now, or do you think that one should stay the long-term course?
Morning, Sakshi. Thanks to be here. No, I think we've been light on the markets for the last few weeks. Obviously, in our discussions that we had over the past few months, a lot of sectors, through my commentaries, have come out to be very, very expensive. And obviously, I think there is a multitude of factors, as you rightly pointed out. One, in terms of the new president-elect in the US, whether Trump brings a lot of tariffs across the globe. That is what the street is probably looking at least at this juncture. You've probably seen a huge spike in US bond yields. So for foreign investors, the kind of equity risk premium that emerging markets were offering and the bond yield movement that you've probably seen, that premium spread narrows down. And therefore, I think it becomes more prevalent to probably stay invested in bonds. And that's the output that you're seeing from foreign institutional investors, not just for India, I think for the emerging factors. Last but not the least, I think what earnings have probably delivered is below par for a whole host of sectors. I think if you leave aside a few stocks within banking, BFSI, a few of the domestic themes, including agrochemicals, I think a large part of the market earnings have largely disappointed. Urban consumption is largely down, as we are hearing from a lot of commentaries, and is expected to probably remain soft. And therefore, earnings might recover only with the effect, and therefore markets might remain sideways.
Right. Mayuresh, we'll have to just quickly take a very short break. There is some kind of a technical glitch and we're not able to relay the program properly, and we'll be back, viewers. Just bear with us for 30 seconds and we'll be back. क्या हो गया?
Adani Group shares fell up to 20% as trading opened Thursday on news of Gautam Adani and 7 others being indicted in the United States on charges of a $265 million bribery scheme and fraud. Among those charged is Gautam Adani's nephew Sagar Adani. According to authorities, Adani and the other defendants agreed to bribe Indian government officials to secure lucrative solar energy supply contracts. These contracts would have, according to authorities, yielded $2 billion of profit over 20 years, along with the development of India's largest solar power plant project. Prosecutors also said the Adanis and another executive at Adani Green Energy, former CEO Vineet Jain, raised more than $3 billion in loans and bonds by hiding their corruption from lenders and investors. The 54-page indictment alleges that Gautam Adani personally met with Indian officials to advance the illegal deal and secure the contracts. Prosecutors alleged that Adani and 2 executives conspired to misrepresent the company.
Welcome back, viewers. You're watching Market Today. We have Mayuresh Joshi with us. Mayuresh, coming back to you, and I wanted to assess how have you read through all the fine lines of the US indictment of Gautam Adani and several other officials right there, the impact that we saw play out in the Adani Group stocks overnight, of course, and taken the confidence of Indian investors yet again for the third time in just about 2 years, when it comes to the Adani Group. So for someone who's been holding on these stocks with a lot of patience and keeping a keen eye out on the long term, how should one be really looking at these consistent external shocks that come in?
Because with the indictment, I think there will be a lot of legal discourse that will now take place. And therefore, I think being light probably makes sense at this juncture. Let's see what probably comes out over the next few days.
Right. Let's look at all these stocks. The pre-open has hit, and you can actually see a 50-point of an uptick on the Nifty, which is 23,400 above. But most of these stocks are down in trade from the Adani Group. You have 4, 5, 6% downtick coming in on Adani Energy Solutions, on Adani Power, on Adani Total Gas. Let's also look at Adani Green, Adani Enterprises and Adani Ports. These were the 3 stocks that actually had fallen the most in yesterday's trading session as well. So let's pull up these stocks to see how the second day is panning out. Adani Green is down by 5.7%. At least the intensity in the pre-open is not as severe as it was yesterday. Adani Ports is down by 3.8% at 1,072. So let's hope that, things are much better on, but we'll have to just wait and watch. And how Mayuresh has said that it's better to stay light and not go overboard at this point in time. Let's also welcome Mitesh Panchal, who's going to be tracking the technicals for us in the morning show today. Mitesh, warm welcome. Good morning to you as well. Tell us, what has your view been? What did you do all along yesterday when it comes to the Adani Group stocks after sharp fall? And what do you plan to do now?
Good morning, Sakshi. Good morning, Mayuresh ji. Good morning to all our viewers. Basically, as far as Adani Group is concerned, we know that since last many months, the regulatory hangover is there. So, I mean, there is no need to touch the stocks or no need to even buy the stocks at the lower end. So, this is our house view, Sakshi, that whenever any group of stocks or any house is getting to the regulatory impacts, we will completely avoid. So, as far as Adani Group is concerned, there is no need to look at the technicals because yesterday's crack was very big and the structure of the chart on monthly and quarterly has already been damaged. So you can see a much more downside from here in tranches. So first of all, not advisable to buy at the lower level. But as I said during my last discussion as well, wealth creation is all about individual stocks, and these are the opportunities where one should start opening up the checkbooks and start at least deploying 20-25% into the market. So we are selectively buying this market. Last time I also mentioned about few stocks. We are buying the same thing, which is like dynamic product, which we are buying, Ambika Cotton Mill, which we are buying, Magna Electro Steel Cast, which we are buying, Lakshmi Electrical Systems, which we are buying. So these are the stocks from the micro and the small caps, which we like the most based on our technical setup, and we are buying it currently.
Okay, got that. So, not advisable to invest in the Adani Group stocks as of now. Mitesh also expects there to be a periodic further sell-off from here on as well. But the key stocks that he's mentioned, like Dynamatic Products, he's talked about Lakshmi Electrical Systems. These are the key stocks that he's consistently looked at, and he's talked about these stocks even in our prior interview with him. The markets are settling in the pre-open. The Nifty is hovering around 23,411 right now. It's the IT stocks that could be the flavor of the day again. A 0.6% of an uptick is what I can see right now. Stocks like Infosys, Tech Mahindra, HCL Tech, these could be back in flavor again. What else is pulling back seems to be PSU banks, about 0.5% higher. The oil and gas space also, ONGC indicative of a 1% uptick. You can also see a whole host of other stocks like GAIL from the gas space also inching higher. IOC. These and HPCL, BPCL as well. These are the kind of stocks that could be moving up. Small caps are indicative of a higher start. Barring the realty, the metals and the media stocks, rest of the pockets are actually indicating a positive start. So let's see how this really holds up right now. Let me come back to Mayuresh and ask you, Mayuresh, as far as the safe pockets are concerned, despite all this volatility and external waves, where should one be really keeping their safe space or continue to invest in slowly and steadily in some of the safer pockets?
So I think the watch list, Sakshi, that probably comes out are these domestic sectors.
Okay.
Domestic agrochemical players have given good set of numbers. Obviously, the Kharif season has been good. We had a good monsoon this time around. Reservoir levels are good, and then for the Rabi harvest is also expected to be better this time round. So I think a few select agrochemical names like a Paradeep Phosphate as an example. A good set of numbers. They're doing backward integration for sulfuric acid, phosphoric acid. That has come down quite significantly. So this is one stock and sector that can be kept on your watch list and radar. The second element that can work out for the markets is obviously a few of these domestic infrastructure manufacturing teams. And a few of the companies have really given great set of numbers. And I think earnings will remain consistent for these companies, looking at order books, expectations of their earnings delivery as well over the next few quarters. So I think a few of the stocks that we have kept on the watch list, stocks like an Azad Engineering, stocks like a Swaraj Engines, as an example, which can be an appropriate theme in terms of both rural infrastructure as well as manufacturing. Some elements of BFSI have given decent set of numbers, and therefore I think a few of the BFSI stroke housing finance stocks can also be kept on your radar. So anything like a PNB Housing, a Karur Vysya Bank on declines, can, in my opinion, still keep on delivering as far as earnings is concerned. So I think we are focusing more in terms of domestic cyclical stocks.
Domestic cyclicals, Paradeep Phosphates, Azad Engineering, Swaraj Engines, PNB Housing could be some of the stocks that you could be looking at. On Paradeep Phosphates, some of the key parameters that I could share with all of our viewers is that the stock has been an outperformer in the last 1 month, about 24% of an uptick despite the kind of fall that we've seen in the markets. You can also see last 3 months move of around 20%. Last 1 year, it's moved up about 68% in trade. That's the kind of move that we've seen. A PE ratio of 24 times, market cap of 8,700 crore rupees, price to book ratio of 2.5 times as well, and a face value of 10. So those are the kind of key parameters that you could be really looking at on this stock. Stock is on a better footing right now. Let's also come back to Mitesh right there. Mitesh, you did talk about the small and the mid cap stocks that you're looking at, but how about the large cap space? Where exactly would you really look at? Because the earlier consensus has been that this year could be where the large caps could actually provide you that hedge in the portfolio despite this volatility. So within the large cap space, which are the pockets that you are eyeing?
So again, this is a very interesting question at this juncture because the theme during the earlier part of the year is like you get into large cap and you will make at least good amount of money. But as we all know, that large caps are the stocks where we have witnessed such a good amount of correction. So if the index has to go up or stabilize, it is the large cap which has to stabilize. So we are of the view that Reliance is looking absolutely attractive at this level. Apart from that, selective pockets from FMCG like Britannia, Nestle, HUL is looking very interesting right now. We are pretty much bullish with respect to the monthly and quarterly chart on the metals space. So Hindalco and Tata Steel is also looking good. And from the banking space, we are of the view that Kotak and HDFC Bank is looking attractive at this level technically. So I think these are the bunch of stocks on the large cap side where we advocate our clients to park money in tranches. again, as a disclaimer, I am not holding any of these stocks, but since they have been suggested to our clients, so our clients might have direct or indirect position in all the suggested stock during the show.
Okay, so stocks within the FMCG space like HUL and Britannia, metal stocks like Hindalco, Tata Steel, and from the banking space, stocks like Kotak Mahindra Bank and HDFC Bank within the large cap basket is what Mitesh really prefers right here. Just a few seconds away from the markets to hit open. Let's quickly look at how the Nifty is opening. 23,400 is definitely with us right at the opening, 49 points higher in trade. The Nifty Bank opens about 0.4% up, better than the Nifty, 50,589 or 216 point of an uptick that can be seen right there. Again, it's the IT pack that's definitely up, like we had indicated, about half odd percent higher. Infosys is something that you should be looking at. That's also inching up about 0.6% up. Tech Mahindra is also inching higher. You also have from the banking space, ICICI Bank, SBI, both also inching up right there. Wipro also up by about 0.7%. Remember, there is this bonus discussion that is now coming into for Wipro. ONGC is also up by about 1 odd percent. So those are the top movers as far as the Nifty is concerned. Barring the realty, metals, FMCG and the pharma, rest of the sectors are inching up right here. But look at the India wicks. That's something that you should look at right at open. 16.5. It's a sharp uptake of almost 6 odd percent right there. No, it's a 1% uptick. So we'll keep an eye out on that one. There was a huge fluctuation on India wicks right there in the open. We'll come back to that. PSU banks are opening about 0.7% higher. All the three constituents of the Nifty bank are up into the green. You have the auto space that's also throwing up some names that could be in the positive zone. The PSE index is also up by about half odd percent right there. Several stocks like Tata Consumer Products, NTPC, and Axis Bank, Grasim, Bajaj Auto, Tata Motors are also inching up higher in trade right now. Let's also pull up some of the stocks that are from the stocks to watch list to see how things are moving forward. Protean eGov Technology is one of the recently listed stocks. Remember, NSE Investments will be selling up to 20.3% stake in the company via offer for sale, and the floor price has been set at 1550 rupees per share. That's something that you could really looking at. Protean eGov is indicative of a negative opening right there. So we'll keep an eye out on how this pans out for the stock right now. Let's also look at the Adani Group stocks then, all of them yet again, to see if there are any signs of reversal coming in on the entire pocket. Adani Energy, though it's still down 5.2%. Let's also look at Adani Green. Adani Enterprises down by about 4.3% at 2088. Adani Green is down by 8.4%. So one of the severe falls that continues on Adani Green right now. Like I said, Adani Energy Solutions is down 5.6% odd or so. Let's also pull up Adani Ports. Yes, it's 4% lower in trade. Adani Power is down 3.5%. Let's pull up Adani Total Gas, ACC and Ambuja and even NDTV to see how those stocks are also performing in trade. Adani Total, there's a 3% dip. Let's also look at some of the other stocks within the basket. Adani Wilmar is down by 2.7%. So all across the board, weakness still continues, although the intensity has further reduced. ACC is just half odd percent lower in trade. Ambuja Cements is half odd percent higher. So some of the stocks have already started to show some reversal right there. Mitesh, would you be comfortable with the kind of reversal in trends that we are seeing from yesterday in some of the stocks within the Adani Group today?
Not at all. I think, as I said, it's too early to comment anything on the Danish stock as far as the bottom is concerned, as far as the reversal is concerned, because yesterday, if you look at the delivery-based volume, Sakshi, it's huge. So I think we should avoid that. Apart from that, as we have seen that in after such a strong fall, when the averages becomes negative, it becomes favorite trade for all the traders, and the qualification of the trade is sell on rise, I think. So I think the stock qualifies for sell on rise. So any up move going forward will be sold into, so not advisable to get into. But in the early few minutes, I think few pockets are looking pretty interesting. Among them is, I think, fertilizer. Coromandel fertilizer at 1791 looks good, with a stop of 1770 for the intraday target of 1820 or 30. And after a long period of time, Tata Power is looking pretty interesting at 412 with a stop of 405 and can go long with for the target of 420, 430 for the next 1 or 2 days. So I think Coromandel International and Tata Power is looking interesting in early few minutes.
Okay, early few minutes, these are the stocks that you could be focusing on. Now, Mayuresh, let's come back to you. I wanted to discuss with you on SBI particularly. Brokerage houses are penciling in higher targets for this one after the roadshows have taken place, where the management have stated the plan to improve deposit growth, align incremental growth between loans and deposits right there. Asset quality is still holding up. Recoveries will also be aiding in H2 is what the management believes. 789 currently a percent high trade. How would you look at SBI? Jeffries has penciled in a 1030 target.
You should definitely hold on, Sakshi, SBI. I think the numbers have been reasonably good. You should understand that the base for SBI is pretty large. So I think if they underdeliver a tad bit on numbers, I think it's for the base that they're probably working on. At the same time, I think asset quality pressures have come off. The management sounds very, very hopeful in terms of a reasonable advanced deposit growth. And therefore, I think the credit deposit ratio should remain extremely stable. You're seeing some element of stability come back in NIMs. With the kind of volatility that you're probably seeing in the markets right now, I think the deposit growth, specifically time deposits, might actually improve going forward as well. And they've got a huge legacy database, which
Yeah.
probably that deposit growth should continue. So I think anybody holding on to SBI should.
Right. In fact, the entire PSU banking story is recovered. Yesterday, this at one point in time, there was an over 4% cut on the PSU banking space. It had slowly, recovered from some of those deep losses towards the end of the show, end of the session. But if you look at the kind of move that we are seeing today, sharp reversal again, 1.5% higher. All across the board, you are seeing gains of anywhere between 1 to 2.5%. Bank of Maharashtra, Bank of Baroda, PNB, Canara Bank, Central Bank of India, Bank of India, UCO, all of them are upwards of 1.5% higher in trade. Mayuresh, do you think it was a knee-jerk reaction on the Adani group that had also impacted most of these lenders within the PSU banks yesterday, and things are not as bad right now?
High probability. And again, I think a good set of numbers delivered by a lot of PSU banks,
Yeah.
actually. So Bank of Baroda as an example, right?
Yeah.
A very decent set across all parameters. You've probably seen Bank of Maharashtra deliver a good set of numbers as well. So my opinion is, again, I think valuations still remain very, very attractive for the PSU banking space. Obviously, at some point of time, you are going to see incremental advances growth being quite decent over the next few quarters. And therefore, I think from a risk reward perspective, from a valuation matrix perspective as well, they're very decently placed. So outside SBI, I think Bank of Baroda as an example, Bank of Maharashtra, I think become decent bets based on expectations of stability in earnings.
Okay, 100 points higher in trade, about 7 minutes into the trade right now. 23,457, 23,460 being seen on the Nifty right now. So the markets are gaining strength. Mitesh, coming to you, how would you look at the strength that you are seeing right now in the Nifty? Will this carry on towards the end of the session as well? Again, we head into the weekend. It's been, a truncated week with no clear direction in the markets for this one. How would you look at the Nifty?
Okay, so the best strategy, Sakshi, right now is to look at the market in the second half, because we have seen a reversal probably in the second half only. So let us see to it on the hourly chart and on the half an hour chart how the Nifty is panning till 12:31 1 p.m. and then we'll take a call. Probably it looks like that today we might have a close above of 23,500, because that is technically a good level, which will allow all of us like technical players to advocate the fact that now probably the floor is between 23,000 to 23,500, and we can have some sort of a bullish view for the next week. So probably what we are looking at right now with the existing setup is a close about 23,500.
23,500 is upon us, viewers. 150 points higher in trade right there in front of us. We've moved swiftly within the first few minutes on the Nifty to the day's high point and above that 23,500 mark. Let's hope this sustains and also builds on from here. Let's quickly look at the index contributors right now that we are seeing in the markets. Market breadth has been improving as well, and several pockets have turned green. ICICI Bank is the top contributor to the Nifty. 24 points is getting contributed from that one. HDFC Bank about 15.7 points. Reliance Industries is contributing nearly 14 points. SBI, L&T, Tata Motors and NTPC are the top 5-6 performers. 47 stocks on the Nifty have turned green, barring the Adani 2 stocks, Adani Ports and Adani Entertainment, and of course Axis Bank, which is still down in the red right there as far as the contributions on the Nifty are concerned. Let's get back to Mayuresh, right there, we discussed the PSU banks. How about the private sector banks, ICICI, HDFC? Are you getting more confidence as time progresses for these two heavyweight private sector banks? Should they be now incrementally be increased weightage in individual retail investors' portfolio as well?
So I think within the private space also, Sakshi, I think some banks have given good set of numbers. I think the entire apprehension was how deposit growth will probably take place, and deposits have actually seen a decent growth for even the large private banks. So to that extent, again, on all parameters that we're probably talking about, private banks also probably seem to be on a good footing. And the base case scenario remains the same. I think if India has to grow at an exponential pace, I think banks need to probably give that element of liquidity and support in terms of growth vectors. So yeah, Axis Bank, ICICI Bank is something that we continue holding in our global portfolios as a clear disclaimer.
Okay, got that. Let's look at the markets yet again. All the sectors are up into the green, viewers. So it's panning out to be a good start for the markets. 2% higher for the PSU banking index. That's the one that's definitely providing that extra edge. Real estate sector is up by 1.5%. You also have the oil and gas, financial services, autos. Even the mid and the small caps are now up 0.7% odd in trade. IT, pharma, metals have also come back. FMCG, they're all contributing to the gains right now. The India VIX has slipped about 3 odd percent, 15.5 levels for this one right now. SBI has moved to the top spot on the Nifty, 1.7% higher. You have Grasim, HDFC Life, Tata Motors and Bharat Electronics as among those stocks which are actually moving up. PSE index is improving in strength, 1.3% higher in trade for the PSE index. PFC is something that's doing well right now, 2.3% higher in trade, and RDC is also moving up. Remember, Bernstein came out with a report early this morning talking about how PFC and RDC stocks were sharply down yesterday on the news of Adani Group, and therefore the street was probably thinking that the loans given out by REC to Assured Power is something that would be at risk right now, but things are settling down. Bernstein still believes REC and PFC will continue to see continued buying and strength from here on as well. Info Edge is something which is interesting on the F&O space. It's moved to the top spot, 5% higher in trade. A very strong surge is coming in. Mitesh, would you be able to comment on Info Edge that is being seen in the F&O space?
Yeah, so I think again in all these stocks it's a pretty good reversal, but too early to comment on the reversal. So let's wait for today. Weekly close is pretty important for us. So if today Info Edge or Naukri is giving us a close above 7920, then Sakshi we can come out with the view that yes, the bottom is in the place and probably stock will head higher for around 8,100 level. So let us wait and watch that how these all stocks which are showing early momentum are able to continue the momentum in the second half or not, or they are losing the momentum. So that is the big call right now, looking at the volatility of the market. So let us see to it whether the reversal will continue or not. Weekly close is pretty important, as I said. 7920 is what we are looking for.
Okay, got that. Let's again look at the Nifty Next 50 movers. Strong moves on Info Edge, like I pointed out. Macrotech, that's up 3%. PFC, REC, you have the banking names. HAL is also moving up, 2% higher in trade. We did see BEL also moving up in trade. Let's get Mayuresh back onto the conversation on this defense pack right there. Is the worst behind for stocks like HAL and BEL, Mayuresh?
Large part seems to be the case, Sakshi, but if they consolidate more at lower levels, I think they will offer better entry points. I've always maintained this stance, wait for declines. I think those declines have come. It now really depends on how they probably execute in the remaining 2 quarters. So I think you will get your opportunities. So keep a watch out for this pack. We are keeping a close eye.
Okay, Mazagon Dock, Garden Reach, they're all showing some signs of uptick right now in trade today. You know, you have Paras Defense, that's up 2.7% as well. Mishra Dhatu, that's up over 1%. Cochin Shipyard up 0.7% odd or so as well. So that's a kind of surge. There's another very interesting, move that we are seeing, and that's in the tourism space as well. And I'd like both Mitesh and you to comment on that. Tourism Finance Corporation, that's up 7% in trade today. Yesterday also, it was an outperformer despite the overall decline in the markets. Even Indian hotels, that hit a record high level on a day like yesterday too. So strong surge being seen in the tourism hospitality space. You have today Asian Hotels, GMR Airports Infra, several other smaller hotels like Adani Hotels. They are also showing up some signs of improvement in trade today, and of course EIH, Thomas Cook, IRCTC, they're all showing some kinds of an improvement. Mitesh, first to you, how are you really looking at the charts of tourism finance and IHCL to begin with?
Tourism finance, if you look at the charts, actually from 220, the stock has beaten down, and now the stock is looking at a dead bounce. Probably, I am of the view that the bounce will not sustain. Probably on the higher side, we might have 168, 170 as a floor, but I don't think so. The stock will sustain the momentum on the upside. As far as the second stock is concerned, I am again of the view that the momentum on both weekly and daily chart is not that great. And I am of the view that probably from here on, you can see 5 to 7% downside going forward. So both the stocks, I will keep status quo as a sell on rise, not advisable to get into the stock and even looking at the dead cat bounce rally.
Okay, it's a dead cat bounce according to Mitesh on these tourism-specific stocks. Mitesh, to you, Mayuresh, to you, how are you really looking at this space, particularly towards the end of the year as well, holiday season beginning? Do you think there will be enough and more demand, and this space will come back in flavor?
Demand is there. So, I mean, you look at every weekend, Sakshi, forget the holiday season. The rates are through the roof for most locations. Again, I think a large part of the organized hotel space, you are incrementally going to see rooms getting added. There is obviously a lot of expectation in terms of earnings delivery. You are heading into the strongest quarter of the tourism season, quarter 3. And therefore, I think numbers should be relatively better. In fact, they should be very, very good for most hotel stocks. The only issue, like Mitesh pointed out, is price action has been very, very strong. Valuations are very rich at this juncture. And therefore, I think even if the EPS ratings, RS rating, institution holding, like we see in Cancellum, match most parameters for stocks like a Indian Hotels, like an EIH, like a Taj GBK, our own sense is that you should probably be waiting for declines for good entry points. That is where valuations will become a little bit saner. And I think it will be rewarding from risk reward perspective for investors.
Okay, so that's the hospitality space, and we've got you both fundamental and technical views on these stocks that are buzzing and the space that has been in the flavor as well. But Mayuresh, another space, another thing that I wanted you to address is as far as the FII flows are concerned. I wanted to just ask, how have you assessed the situation thus far? Of course, it's been one of the massive, biggest sell-offs that we've seen in a shorter time frame of about 5 or 6 odd weeks. The kind of over 1.2 lakh crores of sell-off has been seen from the FIIs. Although the DIIs have been paying dollar for dollar, all this while propping up the markets with their support right there. But do you think the large part of the sell-off from the FII side is over, especially on the back of the fact that most of the brokerage houses are now changing their stance when it comes to India versus China in terms of their favor, how they are downgrading China, because one of the key factors was also that sell India, buy China, which had prompted some of the sell-off to happen too.
So I think, Sakshi, the first point here is that the FI sell-off is not only limited to India. So I think the conditions that have probably taken place in terms of yield movements in the US, the risk premium coming off for emerging markets, the sell-off has been uniform across emerging markets as a fact. The second element is domestic liquidity is so far held out very, very strongly. I think if this continues and if they counter the FI selling, the kind of fall that we've probably seen, maybe there is some more to come, but I think the worst might probably get over in the next few weeks or months. The third element is that in terms of the quantum of selling itself. So if you probably look at the past crisis situations as well, right from 2007, 8, 13, 14, COVID crash, I think the sell-off has been relatively larger compared to the earlier time periodicities as well. But one must also understand the market cap has also expanded quite meaningfully. So there might be some element of selling that might still come through. DIs have shielded it very, very well. And therefore, I think the kind of fall that you see for the main index, that is Nifty of around 10%, broader markets maybe 20 to 25%, the fall might have been even larger if DIs were probably not present, as we've seen in the past. But I think even if the fall comes through, I think it might not be as substantial like we've seen in the past few weeks. And we might be closer to the bottom as we head towards the end.
Right. Well, on that note, we'll thank you, Mayuresh, for being with us on this special edition to share with us all those insights like you always do with our viewers. Truly appreciate your time with us. Thank you so much.
Thank you so much. Thank you so much.
All right, viewers, we'll continue to discuss our market views with Mitesh now. Mitesh, you would have observed the market, how it is moving right now. What else has caught your attention? It's the Nifty bank that's outperforming clearly. So it's the banks all the way. Anything that you like here?
So again, we are looking at from the reversal viewpoint and from a intraday viewpoint only. So I think if you look at the reversal of Ambuja Cement, it looks pretty interesting at 497. So with a stop of 490 for the day, one can go long into Ambuja Cement. Second is what is looking interesting is Apollo Hospital. I think at 16837, that is also looking interesting. So with a stop of 6800, one can go long in Apollo Hospital for the potential target of 6880, 6920 for the day. Interesting thing to note, Shaks, is that, yeah,
Please go ahead.
yeah. So the most interesting thing to note right now is that one should focus on the restructuring of the portfolio and where to deploy the fresh capital, because these are the times where unfortunately people continue with their stocks which are bleeding like anything, and they
Yes.
are unable to exit from that, and then perhaps that fear will not succeed, allow you to park new money. So a humble request to all our viewers is, rather than going for new stocks right now, the first focus should be on restructuring the existing portfolio. And if you do that exercise pretty well, perhaps that will give you a lot of confidence to park new money. So I think the reversal process should be begun right now, and one should look at the portfolio restructuring exercise. Part A of the discussion. Part B is that if the stock is falling by 20%, 30%, 40%, does not mean that it's a level to buy, or probably it's a level to get into. Let the stock stabilize at whatever the level they are at. And it is advisable to buy 5 or 10% higher, but after forming the bottom. If and provided that if you are not a full-time investor or a full-time trader. So I think the view is very clear. Deploy in tranches, wait for the bottom to happen if you're not a full-time trader or investor, and please go ahead and do restructuring of your portfolio.
I think that's a very important point that you have shared, Mitesh, at this point in time. A lot of the viewers and investors right now are struggling with what exactly should their step be in this extremely volatile market. So they're consistently watching their portfolios, they're watching their portfolios bleed, yet hoping on how reversal can happen and the same stocks can continue to give them enough strength and edge even going forward. That may not be the case. So Mitesh is asking you right there, look at the stocks that have probably seen sharper falls, 20, 30, 40% odd. Don't think that those could be an indications to actually take an entry. If there are no signs of reversal in certain pockets, you may need to exit from certain stocks, bite that bullet, book losses, and probably enter where you can probably cover those losses and make better profits. There is no point in believing that the same stocks that had performed thus far will continue to perform even going forward as well. So that restructuring exercise you need to do along with your financial advisors right there. But just to give you a sense, I will ask Mitesh to help us broadly tell us, what are you really looking to avoid? What are you looking to add in terms of key sectors to give that broad idea? If somebody is heavy on one sector, one immediately understands from your point of view right here that this is the sector that might not give me immediate or interim returns. So I need to again do and mull and rethink on the stocks that are in my portfolio. How would you really advise there?
Exactly, Sakshi, very excellent questions at this point of time. See, the first thing which we should understand is that these are the times where we should understand and learn how to book losses. No one likes losses, no doubt about it. But then somewhere, somehow, you have to go through that pain process. So these are the times where you should start cultivating the habit of booking the losses, so that going forward in the journey of investing, it will help you. The common mistakes which we come across, Sakshi, during this kind of period is that people are absolutely heavy in the current themes. So the best advice is that whatever is the current theme, for example, defense was a theme before 2 months, the PSU was a theme before 2 months, and see how those stocks have cracked or the sector has cracked. So I think do not go more than 10 or 15% of the total portfolio allocation in a single stocks. Second thing, within the sector also do not give more than 3 to 5% weightage to a given stocks. Apart from that, I think you should be having fairly 7 to 10 different sectors into your portfolio, and the best and the boring part of it is that always sit on 15 to 20% cash irrespective of the market movement, because we have witnessed or we have experienced this actually over a period of last 20 years that cash is always a king, and you will definitely get a bargain opportunities irrespective of the momentum of the market. You will always get few stocks much cheaper at lower levels. So I think sitting on the cash looks boring and stupid sometimes, but that proves to be the prudent and the most extraordinary strategy many a times. So do those things which will not excite you in the market, because what excites you in the market always gives you the pain, and simple strategy needs to be followed at this point of time. And now I think after 2020, Sakshi, you will also agree that these are the meaningful corrections which we have seen. So time to tell oneself that be disciplined, have patience, do some homework on your own, and then probably put your money for work. Do not believe on the borrowed knowledge. You can get an idea, but you have to put your money, you have to put your brain, you have to put your hard work to create wealth. So I think these are the lessons which one should learn right now, avoiding the noise of the market. And believe me, Sakshi, you will get very few opportunities to learn in the market.
That's very true, and point very well taken, viewers. If you've taken this note, and if you've not taken this note, we promise you we will actually put out this as a chunk for all of you to really understand. These are the pearls of wisdom that most of our top market experts share with all of you, with the kind of experience that they have seen in the markets, various cycles, and they know what is in the offing. So please follow this advice and also ensure that your portfolios and your investment strategy actually proves out to be a long-term winning strategy for yourselves, and don't get into the trap of a trading mentality at this point in time, at this point, because this is the time which is going to be tough. It will be definitely, it will pass on, it will go on, and after some time you will see some signs of reversal, and Mitesh has pointed out, but that is when you should actually know where the strength will actually be delivered to your portfolio as well. So thank you, Mitesh, for bringing that point out for all our viewers right there. Coming back to the markets, consumer durables have slipped into the red, but rest of all of the sectors are still staying put with strong gains. PSU banks, realty, the banking index as a whole, IT space is also pulling up, oil and gas, infra, even the broader markets are actually shaping up well at this point in time. On the Nifty 500 basket, we do have some interesting names. Info Edge has already been pointed out, 5% higher in trade. We have Kalyani Forge, that's up 5%. Then you also have stocks like Zaggle Prepaid, that's another buzzing stock, 5% higher. You have Mangalore Refinery and Petrochemicals, that's up 6% in trade. NIIT Limited is also up about 7 odd percent. You've talked about tourism finance, that's also up 7%. Padamji Paper Products is also up by about 8 odd percent, just to give you a sense of where the buying is happening in the broader markets right there. And Ambuja Cements, as has been pointed out by Mitesh already, is now 2% higher in trade. And you also have strong moves that are coming within the broader markets, within even the auto ancillaries pack. When we look at Samvardhan Motherson, there is a comeback happening on this space. Remember, we'll keep an eye out on stocks like Swaraj Engines that even Mayuresh has pointed out too. Those are the key stocks that you could be really looking at this point in time for your medium to long-term portfolios right there. Some sell-off happening from above that 23,500 mark on the Nifty. 121 points uptick is still remaining, 23,465. So like you were pointing out, Mitesh, I think the trend is not very clear. We really need to see how this really pans out for some more time to see whether the bulls have the strength to go on before we close for the weekend. Again, we are selling off from the higher point. What will you be looking at in terms of key levels on the Nifty?
That's what we have discussed, actually. I think 23,500 is what we are looking at. And we have seen, I mean, Nifty is unable to sustain above that level. Again, with respect to the Bank Nifty, 51,000 is a floor. I think above 51,000, there is a strong reversal. So I think for the day, since it's a weekend, since yesterday was a big carnage, it's selective stocks, since we are falling since last so many days. So I think today's close is pretty important to decide whether we are heading for 23,000 or whether there will be a pause between 23,000 to to 23,500, and then finally there will be a relief rally about 23,500 or not. So let's wait and watch. I think second half is pretty important. We have witnessed so far that whatever we are gaining in the first half is being sold into the second half, and the winners and losers are completely changed in the second half. So let us look at whether this Friday the trend will continue or not. So better to take the call of where the Nifty will move. The timing is between 2 to 2:30.
Okay. I also want to take a view on the real estate sector with you, Mitesh. There have been several stocks that have been actually in momentum over the last few days again, and coming back after this consolidation. Stocks like DLF, macro tech developers, they have been outperformers. Today, Sobha is on the radar of HSBC, which is given a 2150 target on Sobha as well. The entire space seems to be in momentum. Is this something that looks promising to you?
See, the only one stock which is looking promising from the reversal point of view is Godrej Properties. If you look at the charts of the Godrej Properties, it has fallen from 3,100, 3,000 level, and now it is available at 2793. So this is the stock which is looking interesting from the pullback point of view. Second stock which you have pointed out, which is looking again interesting from a viewpoint of a reversal only, is DLF. So if you look at the chart pattern of DLF, again between 820, 850, there is a strong resistance. Now the floor is coming between 750 to 780. So right now the stock is trading at 792. If you are managed to get the stock between 760 to 780, I think it's an excellent buy. Going forward, within the next 1 to 3 months, the stock will be able to cross around 850 to 900 marks. So within the entire reality sector, Godrej Property and DLF is looking interesting.
Okay, Godrej Properties and DLF is looking interesting, and kudos to you, Mitesh, for pointing out Apollo Hospitals. It's moved to the top spot as far as the Nifty is concerned, 2% higher in trade, and Mitesh further expects, strength to continue on this one. Would you stick on with your targets? Any revision right there after this move has come in now?
No, I think the target which I set in the morning, we stick to it, and let us see to it that how the follow through will take place. So I think the momentum is gaining. First half an hour candle is over at 9:45, and that is looking very promising. So for the rest of the day, I think the stock likely to test higher highs, and probably we may see a stock trading closer to 6950. So again, 100 points upside can be witnessed in towards the day end.
Okay, got that. Well, we'll thank you, Mitesh, on that note for being with us on this special edition to help all our viewers with the strategies overall in the current market scenario, with the key stocks and pockets that could be really safely looked at the current moments, and the places where one should be really looking to avoid, and the cash component that you've highlighted, which is very, very key in this current cycle of the markets, that you should not forget to give importance to in your portfolios right now. Sometimes sitting on cash can actually be fruitful, is what Mitesh believes. Thank you so much, Mitesh, for being with us on this special edition. We'll start wrapping up the markets for you in the morning trading session. First half an hour of trade over. We have seen some sell-off from the high point. About 100 points still remain with the winning side on the Nifty, 23,437 right now. But we'll have to see whether this actually quickly sees some sell-off as we are witnessing right now. We are 86 points down in trade. So let's see where this volatility really plays out and takes us. Although most of the sectors still are holding up strength, with some of them that have slipped, metals, autos and FMCG have given up the gains, and consumer durables as well. Real estate sector, with 1.5% gains, remains the top mover, with PSU banks also 1.5% higher. IT space with about 1% uptick right now. The broader markets are also soon looking at some of the gains getting lost in the first half an hour of trade as has played out right now. But we'll keep an eye out on the top movers. In the first half an hour, we have seen Apollo Hospitals move 2% higher, ICICI Bank, SBI, HDFC Life and Power Grid as some of the stocks that are the top movers. On the lower side, let's also again point out to key stocks. We have Adani Enterprises, that's down 3.5%, Adani Ports, that's down 3.5% again. Within the other broader market scenario, I have Adani Green Energy, that's down 8%. It still remains one of the worst falls or worst impacted stocks within the Adani Group in trade today. You have Adani Energy Solutions that's down 6.5% as well. Although Ambuja Cements has actually recovered, and how 2% higher in trade is what you see, Ambuja. Let's also pull up ACC for that. For us to see whether that's also come back into the green. Yes, 1% higher for this one. So the cement pack stocks within the Adani Group have come back into the green. About 7 to 8 stocks which are still lower in trade. From yesterday, there's a sharp reduction in the intensity of the fall on the flagship firms and also on the other key firms. Only Adani Green, which has been right in the center of the controversy, and Adani Energy Solutions, the renewable energy plays of Adani Group, they still see some pressure built on for the day too as well. We'll continue to see how it pans out for the rest of the day. So stay tuned with us, viewers. We'll get you all the views that you need to know on Adani Group and on the entire markets as well. The one question that most of the viewers have at this point in time is, for those who've been holding on to Adani Group stocks, what should one do after this scenario? And especially, this is not just the first time. We have seen Hindenburg 1, we have seen Hindenburg 2, and now this is the third time when impediments are coming across US for Adani Group right there. How are you assessing the situation? I'm sure your phones must not be stopping to ring for all those clients who have the position in Adani Group. What would you say to them?
So this is the second time the Adani Group stocks are receiving the jolt in the market because the most of them have fallen over 20%, and some serious allegations have been levied on the group. And really, at least one thing just clears out that this stock is not for the faint-hearted short-term traders, because it is a news-driven counter. Now, the news, how far it will affect this stock from a fundamental perspective, how long this will continue, this is a question mark as yet, because it's just that it's day one that people are just trying to figure out exactly how this is going to affect the prospects of the company. But one thing is clear, that this is not taken well by the short-term traders in the market, looking at the price action and at least looking at some of the counters in the futures and option space, that is Adani Ports and Adani Enterprises. There is still more room on the downside looking at the current downside, because majority of the supports have been broken in these counters. So the advice is that if you have an exposure in the future segment, or you plan to take a position in the future segment, refrain from doing so at the current moment. Let the dust settle down. If you are an investor, yes, you need to be invested from a longer term perspective, because in the past instance also there has been a significant recovery. It will take a lot of time, but in case of the current scenario, wait for the dust to settle before putting fresh funds in the stock. And as of now, I say that there is still more room on the downside if one is looking from a short-term perspective.
Group that will be in focus today is the Adani Group again. So I want to understand, how should one really look at the developments now which are taking place? Of course, this is after the US SEC has indicted Gautam Adani, the chairman of the Indian conglomerate, along with 7 others over their role in an alleged multi-billion-dollar bribery and fraud scheme, according to the US prosecutors. Now, Gautam Adani has been charged in this in the US for bribes worth about $265 million to Indian government officials, and of course this was to obtain contracts expected to yield about $2 billion of profits over the next 2 years and develop India's largest solar power project as well. This has been what the prosecutors have mentioned. They've also mentioned that Adani and the other executives at Adani Green Energy, former CEO V. Jain, has raised more than $3 billion in loans and bonds by hiding their corruption from lenders and investors. So, this is again the impediment that's coming in for the group right after they are slowly and gradually coming out of Hindenburg 2 as well. How are you really looking at this development, and how should an average investor be really looking at the group stocks now, sir?
Sakshi, I think Hindenburg is not out of the way. Let's put one line clearly. If they fail in India, and they'll make desperate attempts to go in any part of the world to make their case for whatever they have done. So I think they are still not out of there, and I think one can strongly believe that whatever the outcome of US SEC and the court out there is also thanks to whatever Hindenburg has done. So it's unfortunate that I think such kind of malpractices are going unnoticed, and unfortunate that I think it results into the allegations and destruction of wealth. Maybe I think separate subject to discuss altogether. Now the second part I think which one should be reviewing, in which part of the world driving is not accepted. I don't understand. I think why we should be so worried about I think the driving part. In US itself, I think the driving is named as lobbying. So I think they have got agents, they have got lobbying, they have got all kind of means available to them. They do the bribing. So from that perspective, too, one should not be getting unduly worried about it. Yes, I do agree that I think there are certain things which one needs to look into, and that is what the job of the regulator and the courts will be. Let them look into it. I think we have no business to get into that part. At least at this point of time, till it is proven.
Tell us, how are you really looking at the Adani Group stocks? Big developments taking place overnight and this morning. And of course, Gautam Adani has been indicted in the US along with some of his fellow officials. And there is a charge of $265 billion of bribe that has been extended from the Adani Group to Indian officials to garner favors in terms of a solar power project, and also has raised loans as well. So these are the pockets that are all reacted sharply to the news coming in from the US. Most of these stocks are down in lower circuits as well. All the stocks down in double digits. Your own sense of how should retail investors be really looking at this development?
साक्षी देखिए, अडानी ग्रुप का जिस हिसाब से न्यूज आया, so I believe this news is going to create some chaos and some mess in the stock market, which we have seen right now, because most of the stocks are down around 20%, 10% on the lower side. So I believe this, ये जो अभी शॉक लगा है, so I believe ये शॉक थोड़ा और रहेगा, extend होगा. Reason is it is the immediate reaction by the stock market players. Now we have to wait for the clarification from the Indian government, from the Adani Group, and from the US official also. So अभी जब तक वो नहीं आता है, so I don't believe कि अभी we have to jump on any conclusion, because this we can see कि अगर आने वाले टाइम में ये भी हो सकता है कि कुछ official statement आएंगे कि नहीं यार, it was just कुछ news था या फिर ऐसा कुछ हुआ ही नहीं. So maybe शायद reaction उल्टा होता. अभी फिलहाल it is better to avoid the entire group, better focus on some other sector. IT stocks are doing good. Banks में HDFC Bank